and can seek the help from technical experts in the due course of investigation. The Director General Safeguard shall complete the investigation within a period of 3 months from the date of receipt of the report. Either the screening or a standing committee will be also a part of it. The period can be extended for another 3 months provided if it is a required incidence. Now, who can file a complaint against the profiteering? Any consumer or an organization experiencing that non-reduction in the price of the goods or services despite reduction in the rate of GST can file a complaint with proper evidences. Any supplier, trader, wholesaler, retailer who could get benefit of input tax credit on account of the reduction of the rate can also apply or file a complaint with the proper evidences. Now, here, whoever may be posted the filed complaint at Director General of Safeguards, Department Revenue, Ministry of Finance, Bal Vihar Singh Satya Sadhan, Gold Market, New Delhi, Bal Vihar Singh Marg, all this, the second floor, they are supposed to send the complaint against the profiteering. Now, whatever the complaint can contact a Director General of Safeguards. Now, who is eligible to recover the amount on account of this complaint against the profiteering is the National Anti-Profiteering has a power to compel the defaulter to return the receptant an amount which is equivalent to the amount not passed by any of the commensurate reduction in prices. And in case if it is not able to do so, then it will be sent to the Consumer Welfare Fund. So all this is regarding to the anti-profiteering. The next we have to discuss about the e-way bill. Now, under the GST, e-way bill is a system for the GST registered person enrolled relating to a transporter for generating the way bill. It is a document which is to be carried by the person in charge of conveyance electronically and a commencement of movement of goods exceeding the value of 50,000 in relation to the supply or the reasons other than supply or due to inward supply from an unregistered person. E-way bill is nothing but it is like a copy which is stating about what are the details of the goods which are being transported from one place to another. So during the transit, this is a bill need to be carried by the carrier. So who has to issue? It has to be issued by the government. So you have to, that is the person has to apply and need to be given to that person. Taking that as a basis, then automatically he will consider into the account. Now, next we have to discuss relating to the customs law, right? So, now coming to the customs law, what is Customs Act? Why the Customs Act is being considered into the account? So, first of all, earlier, whenever, see Raja, Maharajas, if they are there, any trader who is entering into the kingdom, he has to go to the Raja and he has to give the details from where he has come and what actually he wants to do. So unless the Raja is not permitting him to do the business, he doesn't have a right to either. See, whenever he's entering itself, will have a prohibition that he cannot enter. But when he wants to meet the Raja, take the permission of the Raja, then only he can do the business. So this is when we have the kingdoms into the account. After the kingdoms, we got the British rule, and after that, we got independence to the India. And based on the British rules, we have framed a customs law. Usually, the customs law is that is customs duty is an indirect tax, which is imposed on the goods which are imported from outside the country into the country. This act is being formulated in the year 1962. That's the reason why we will call Customs Act 1962. Now, what purpose the Customs Act is being prepared? Now, it is primarily for the levy and collection of duty on imports. So first thing they have to take into the account the regulation of imports and exports. Mostly for the exports also they'll have a control, but government will encourage the people for the goods to be exported. It will only to regulate the imports, the customs duty will be levied. So the first point under which the Customs Act was formulated, enacted, and introduced in the country is because of regulation of imports. The second point which we have to take into the account, why we want to regulate the imports, because we want to protect our domestic industry. Like, even though so many products which are being manufactured within the India, but some of the people have a taste and a preferences to have the products which are manufactured in outside the country. Like perfumes is one of the example where people would like to have the foreign brands. Like that, even nowadays, even the Apple is a phone where it is being manufactured outside India. People are very much interested to purchase either a phone or a laptop which is branded as an Apple phone, Apple organization. Then automatically the organizations which are producing within India, or probably they are getting the parts and assembling in India, they are supposed to be protected. So that's the reason why. And more so, this is a brand which is a, for the brand also they will charge the amount, no? So automatically only a few people could able to prefer such brands. The other people may purchase whatever may be made by local industries. But mostly, government also has to take the steps, see to it that they can protect the domestic industry. This is one more reason why Customs Act being enacted and implemented in India. The next is prevention of smuggling. Yes, so many rules, regulations, provisions, prohibitions has been taken into the account. Even then the smuggling is taking place. The government supposed to prevent that. So Customs Act is required. The fourth one is about the conservation and augmentation of foreign exchange and so on. So these are the things which are very, very important. Because of that, the Customs Act is being enacted and implemented. Now, there are certain statutory provisions we have under the Customs Act. So I'm giving you the overview of Customs Act. The preliminary, that means definitions, commencement, etc., is which has been stated under section 1 and 2. Then officers of customs, like appointment, their powers, their duties, etc., under the customs authority are being dealt in the section 3 to 6. The appointment of customs port, airports, warehouse, etc., all these are being dealt under section 7 to 10 under the Customs Act. The next about the powers of prohibit import and export goods, which are being dealt in section 11 of Customs Act. Then provisions for illegal importations of notified goods and preventions of disposal thereof, which are being specified under section 11A to 11G. Then provisions for illegal export of specified goods, which are being stated in section 11H to 11M. Power to exempt certain provisions of the chapters which are stated under 4A and 4B are being dealt in section 11N. Section 11N. Then levy of duties, exemptions from customs duty, which are being dealing under section 12 to 28BA. Price of goods and incidence of duty passed on to the buyer, which is stated under section 28C to 28D. The provisions for advance rulings such as authorities, application, procedure, powers of authority, etc., which are dealing under section 28E to 28M. Then arrival or a departure of goods, delivery of export manifest or export report, all that is stated from section 29 to 43. Then clearance of import and export goods other than by way of baggage and postal articles, which are stated under section 44 to 51. Then transit and transshipment of goods, which are stated, that is, goods are in transit, which are being stated in section 52 to 56. From 57 to 73 section deals about the provisions which are relating to public and private warehouse. Now, section 74 to 76 deals about the duty drawback on re-export of duty-paid goods or a material used in the manufacture of goods. Then section 76A to section 76N states about the special provisions relating to special economic zone. Section 77 to 90 states about the special provisions regarding baggage, goods imported or exported by post and stores. Section 91 to 99 states about the provisions relating to coastal goods and vessels carrying coastal goods other than the baggage and stores are being discussed. Section 100 to 110A discuss about power to search, inspect, examine the persons and seizure of goods, documents and things which are being dealt. Section 111 to 127 states about adjudication proceedings and confiscation of goods. Section 127A to 127N states about provisions relating to settlement commission. Section 128 to 131C states about the appeals and revision. They will give you the procedure for time limit, etc. The next, section 132 to 140A deals about the offences and prosecutions under Customs Act. Section 141 to 161 deals about miscellaneous items like conveyances, duty deferment, licensing of customs houses agent, appearance by authorized representative, delegation of power, etc. All these are the overview of Customs Act. Now, we need to discuss regarding to certain definitions which we have to consider. So, who can be called as adjudicating authority? So, the person who is competent to pass any order or a decision under the Customs Act, he can be called as adjudicating authority. As you know, appellate tribunal, the tribunal constituted under section 129 under the Customs and Excise Board is called as appellate tribunal. Now you need to know what do you mean by baggage. Baggage is nothing but the luggage which is to be carried through airport, seaport, etc. Which may be unaccompanied or accompanied baggage we may have. So we need to know what is the conditions stated under the Customs Act. Next is bill of entry. I hope you know what is bill of entry, bill of export, which already referred. So I think you may be knowing it. I need not explain about that. The next is coastal goods. The goods other than imported goods which are transported in a vessel from one port in India to another is called as coastal goods. Dutiable goods, that means the goods which are chargeable under duty under this act, that is Customs Act, are called as dutiable goods. Now, next is export goods, all that you know, exporter, who can be called as an exporter. The next is foreign going vessel or aircraft, means any vessel or aircraft for the time being engaged in the carriage of goods or passengers between any port or airport in India and any port or airport outside India. That means the goods are being carried from either through airport or a seaport. That is called as a foreign going vessel or an aircraft. Here we have to define even the goods. The goods includes vessels, aircrafts, vehicles, stores, baggage, currency and negotiable instruments, any other kind of movable property. So any kind of movable property can be defined under the goods. Now import, you know very well, what do you mean by import? Any goods bringing into India from the place of outside India is called as import. So what is import manifest or the import report? Means a manifest or a report required to be delivered under section 30. So it is been stated under so and so section, whatever the things which are being delivered according to that section 30 will be called as a import manifest. The next we have to talk about Indian customs water. Here the water extending into the sea up to a limit of the contiguous zone. Usually they'll take into the account the 200 nautical miles in a sea. In case of customs water, they say it is up to the territorial water extended up to 12 nautical miles from the baseline on the coast of India is called as a Indian customs water. Sometimes it can be extended also up to 24 nautical miles. That is nearest point of baseline. So Indian customs water also supposed to be defined. The next person in charge also need to be. And coming to high sea definition, high sea is 200 nautical miles. In the sea, we have to take the water extended up to 200 nautical miles is called as high sea. That is defined. Now, coming to the next is person in charge. Who can be called as person in charge? In relation to a vessel, the master of the vessel will be called as a person in charge. In relation to aircraft, a commander or a pilot in charge of the aircraft. In case of a railway train, the conductor, the guard, or the person having a chief direction of the train, he may be called as a person in charge. Any other conveyance, the driver or other person in charge of conveyance can be called as person in charge. Now, what are called as prohibited goods? Goods, any goods which are imported or exported to any prohibition under this act. Now, any other law for the time being in force but does not include any such goods, or the goods cannot be permitted to be imported or exported, then those goods are called as prohibited goods. So proper officer means whatever the act as to assign certain functions to a particular officer, he will be called as a proper officer. So he may be function taking the board of the commissioner of customs as a base. We need to discuss about the shipping bill. So as you know, under section 50 of Customs Act refers to about a shipping bill. We have stores, What do you mean by stores? That is goods for a use in a vessel or aircraft or any other articles of equipment, whether or not for a immediate fitting which is stored will be called as stores. Smuggling, already we have discussed that any goods by means of act or omission which will render such goods liable to confiscation under section 1112 to section 113. The next we need to talk about the warehouse. Warehouse, we have two types of warehouse. One is public warehouse and the private warehouse. There are two types of warehouses we have. The public warehouse is licensed under section 57. Private warehouse licensed under section 58. A special warehouse licensed under section 58A. Warehouse is nothing but wherever the goods which are deposited in the godown may be called as a warehouse. Now, the next we need to talk about the customs area. The area of customs station and includes any area in which imported goods or exported goods are ordinarily kept before clearance by customs authority is called as customs area. Customs station can be any customs port, customs airport, international courier, terminal, foreign, post office, or a land customs station. Any one of this can be called as a customs station. So all these comes under the definitions of Customs Act. The next we need to talk about what is taxable event under the Customs Act. The basic conditions for the levy of customs duty either on import or an export of the goods. First, you have to see to it. Import means bringing into India from outside India is one. Second, export means taking out of India to a place which is outside India. That means we are exporting the goods or we may import the goods. The third, let us say territorial waters of India. India includes territorial waters of India. That means the limit of the territorial waters, which is a distance of 12 nautical miles, you have to take into the account from the baseline of the coastal sea into the account that we have to take, and based on that you are liable to pay the taxes. That's the reason why a taxable event will be taken place. Now coming to the different duties which are levied under Customs Act. First is basic customs duty. It is levied under section 12 of Customs Act 1962. Now, normally it is levied as a percentage of value. So whatever may be the total value of the goods, on that a percentage will be levied. That is called as a basic customs duty. So generally the basic rate will be 10%. Like your total value of the goods is like 10 crores. On that 10% if you levy, it is called as a basic customs duty. Next we have additional customs duty or a countervailing duty. The customs, according to the Customs Tariff Act, the countervailing duty will be payable at an effective rate, like goods which are manufactured or produced in India. Whatever the amount of duty which is equivalent to the amount of excise duty payable on such goods which are manufactured or produced in India. On that, whatever the duty you are levying, that is called as countervailing duty. I can as well say it is nothing but an excise duty, because goods manufactured or produced. So I told you it is a form which is changed from the raw material to a finished product. Then there is a need that we have to pay a duty on that. It is called as a countervailing duty. The next, they always say The countervailing duty is leviable even if similar goods are not produced in India. Goods may be produced in India, may not be produced in India, but it may be levied. So that is been stated. Now, exemption of basic customs duty does not automatically mean exemption of countervailing duty. So you may exempt custom duty, but not countervailing duty. So the countervailing duty in case of goods leviable under state excise also. State excise, what are the products which comes under the state excise? Like liquor. Liquor comes under the state excise. So in such cases, whatever may be the duty, because liquor also supposed to be manufactured, right? So whenever they are manufacturing such commodity, then they have to levy this countervailing duty. So you cannot say that it will be exempted. It will not exempted. Basic customs duty can be exempted, but not countervailing duty. So this is relating to the countervailing duty. The next we have a national calamity contingent duty. Now, this is an additional duty of customs which is levied on pan masala and tobacco products imported. So, the petroleum products such as motor spirit, high speed diesel, aviation turbine fuel, tobacco products will be outside the scope of GST. Additional duties of customs will be levied on the import of the same. The next we have an additional duty or a special additional duty, which SAD we may say under section 3, subsection 5. Now, this is offset effect of sales tax, VAT, local tax, or other charges leviable on articles on its sale, purchase, or a transaction in India. That means earlier we used to have a sales tax, we may have a VAT, we may have octroi duty. Local tax comes under the octroi duty. Octroi duty will be levied whatever may be the goods which are transported from one municipality to another municipality. So between the municipalities, if any transport has been taken place, in such cases, either a sale or a purchase, if it has been taken, on which octroi duty will be leviable. But now because GST has been implemented, then all these taxes are being abolished. They say only one duty is supposed to be levied. But under the Customs Act, they will levy as an additional duty instead of saying it as a sales tax or a VAT or a local taxes or anything. Now, the next we will talk about protective duty. This is a duty which is charged under section 6 and 7 of Customs Tariff Act. Now, the protective duties, if you take into the account, it is attractive to encourage imports to bridge the gap between a demand and supply of those articles in the market. So, it is a duty which is being stated. Why? Because we want to bridge the gap between demand and supply of those goods. Right? The next we have safeguard duty. So the central government may impose safeguard duty on certain specified imported goods, which may cause a serious injury to domestic industry. Like let us say domestic industry may be producing certain goods. If we are importing the same goods from the outside the India, then automatically we have to protect our local industries or domestic industries. That's the reason why we will levy this safeguard duty. Now here, articles originating from developing country, whatever may be the article, the country does not exceed 3% of total imports of that article is 1.1 condition need to be taken care. That means safeguard duty will not be imposed on this. The second, they say that 3% import share taken together does not exceed 9% of the total imports of that article into the India. These are the certain things. And even 100% exported oriented units or a free trade zone or a special economic zone. In these cases also, safeguard duty cannot be levied. The next we need to discuss about countervailing duty on subsidized articles, which is levied according to the Section 9 of the Customs Tariff Act. So, Customs Section 9 provides the details about what are the subsidized articles which are imposed if any country or a territory directly or indirectly a subsidy of manufacture or production or exportation of any article. The subsidy includes subsidy on transportation of such article, or articles are imported into India. Like this, a subsidy will be deemed to exist. A government practice involves a direct transfer of funds, including grants, loans, equity infusion, potential direct transfer of funds or liabilities, or both. Government revenue that is otherwise due is foregone. Government provides goods or services other than general infrastructure or purchases goods. These are the area where it is subsidy shall be deemed to exist. The next we will talk about anti-dumping duty. Now, any article is exported by an exporter or a producer from any country to a territory to India at less than its normal value. The importation of such goods into India, the central government may notify in the official gazette, impose an anti-dumping duty, and which is not exceeding the margin of dumping in relation to such article. So here they'll see to it that dumping margin or injury margin, whichever is lower. Dumping means exporting the goods to India at prices lower than the one in the domestic market. That is one point which need to be considered. Second, to prevent dumping, the central government may levy anti-dumping duty up to a margin of dumping, the difference between the normal value and the price charged for export to India. Normal value means comparable price in the ordinary course of trade in the exporting country after making adjustments to the extent of conditions of sale, taxation, etc. Now, the another we have anti-dumping duty can be imposed retrospectively and provisionally. Central government may, pending the determination and the rules made thereunder of the normal value and the margin of dumping relating to any of the article, they may impose anti-dumping duty on the basis of provisional estimate of such value. So the duty can be retrospective, prospective. Retrospective means back date onwards it will be levied. Prospective means future only it will be levied. So today if they have taken a decision, then they will levy the duty from today onwards. They cannot levy from 2012 onwards. So retrospective effect is backdate. That means from 12 onwards, if there is an effect, that effect will be implemented. Usually, like a salary increment or arrears, the people will accept if you give them from backdate. If you ask them to pay the taxes from the backdate, people will not be willing. So that's the reason why always incomes which supposed to be given to the assessees is from backdate. That's the reason why we always call it as an arrears. Whereas tax is supposed to be leviable from today to future. So it cannot be from backdate. So always the government see to it that the taxes will be prospective, and incomes or the revenue supposed to be from the retrospective effect. But this is a case where the government has to levy the anti-dumping duty from retrospective effect onwards. So this is only a special case where they can levy this. And this always, before to levy such things, the central government is of opinion whether they want to levy or not. They have to give a decision notification beforehand, stating that these are the goods. They'll give a notification in the official gazette stating that these are the goods on which anti-dumping duty will be levied, taking retrospective effect into the account. So the dealers or the suppliers or the recipient supposed to be knowing through the notification that whatever may be the duty which is levied. Now coming to the valuation relating to the customs authority. Now, value of goods for the levy of customs duty. Whenever we want to levy a duty, import duty on the goods, first of all, we need to determine the value of the goods. Now, the method of valuation of goods for both import and export for the purpose of levy of customs duty on the basis of transaction value. So we are supposed to know, determine the assessable value or transaction value. Now we have certain rules also for the valuation. Determination of value of imported goods. We have Rule 3, Rule 4, Rule 5, Rule 6, Rule 7 and Rule 8. Rule 3 is about determination of the method of the valuation. Rule 4 is talking about the transaction value of identical goods. Rule 5 states about the transaction value of similar goods. Rule 6 states about the situation where the above methods cannot be applied. Rule 7 states about deductive value method. Rule 8 about computed value. Now coming to the determination of the method of valuation under Rule 3. Now here, when we want to value, first of all, we have to define the transaction value. Transaction value means a value which is referred to, that is payment or paid at the time of delivery, time of place of delivery of imported goods or exported goods. So buyer or a seller are not related. Price should be the sole consideration which are being specified under the rules of customs rules. Now, first of all, what are the things which can be included in the transaction value? Commission and brokerage, engineering charges, design work, royalties and license fee, cost of transportation to the place of importation, insurance, loading, unloading and handling charges, the cost and services required to be included in the price actually paid or payable or exhaustive, loading, unloading charges, the rate of exchange, from the date of submission of bill of entry or the shipping bill, etc. All these are included. Then what is excluded? Excluded here will be, as you know, that it should be the subsidies should be excluded, discounts to be excluded, any other taxes other than GST is to be excluded. Now, adjustments are also to be made. A commission and brokerage except buying commission, the cost of containers imported along with the goods, cost of packing, whether for labor or materials, tools, dials, small, similar items used in the production also need to be excluded. Material components, parts, similar items incorporated in the imported goods also need to be excluded. Engineering, development, artwork, design work, plans, sketches undertaken elsewhere than in India, royalties and license, all this supposed to be excluded. The next we need to talk about adjustments. The cost of transport need to be adjusted. Loading, unloading, handling charges associated with the delivery of the imported goods need to be adjusted. Cost of insurance need to be adjusted. These are the things which need to be adjusted. Now, determination of transaction value in case of identical goods, if you take into the account. Identical is similar one. Similar goods, if you take into the account, then how to determine the transaction value? Here, they say that these goods are in a sale at the same commercial level is one point, one condition to be fulfilled. Second condition is the goods are substantial of the same quality as the goods being valued. The next circumstances under which the conditions are not satisfied, that means a sale at the same commercial level but different quantities. Sale at a different commercial level but it's substantially the same quantity. Sale at different commercial level and in different quantities. So these are the circumstances on which the transaction value, that means whatever the conditions which are stated may not satisfy the value of transaction value. Next, coming to the identical goods. What are defined as identical goods? Identical goods here includes physical characteristics, quality, reputation, being a value except for minor differences, produced in the country in which the goods being valued were produced by the same persons who produce the goods or where no such goods are available, goods produced by a different person, like imported goods were engineering, development work, artwork, design work, plan or a sketch undertaken in India, directly or indirectly by the buyer. The next, we need to talk about transaction value of similar goods. Now, when we take about the similar goods into the account, so similar goods which are sold for export to India and imported at or about the same time as the goods may be valued. Now, similar goods, what do you mean by similar goods? Although not alike in all respects, it may be characteristics, component materials produced in the country in which the goods being valued, or the same person who produced the goods being valued, which are available, what we can say is where no such goods are available, goods produced by different persons. Now, next we need to discuss about determination of value, where value cannot be determined under the rules 3, 4, 5. That means this is being stated under the rule 6. That means which cannot be valued under rule 3, 4 and 5, supposed to be valued under rule 6. The next we need to discuss about the rule 7 relating to deductive value. What do you mean by a deductive value? So here they say about the whatever may be the commission which is paid, usually paid or agreed to be paid, or in addition, usually made for profits and general expenses in this connection is one. The second is usual cost of transport and insurance, associated cost incurred within India, customs duties and other taxes payable in India by reason of importation of sale of goods. These are the 3 points which we have to take subject to the following deductions. These deductions supposed to be made under the deductive value. Right? Rule 7, sub-rule 2 states about the imported goods or identical or similar goods. In such cases, the value which supposed to be calculated, they have to see to it that the goods value should be calculated not but before the expiry of 90 days. That means they'll give you a time limit of 90 days into the account. Within that, they are supposed to evaluate that value. The next, Rule 7, Sub-Rule 3 states about the imported goods or identical goods or similar goods are sold in India in conditions as imported shall be based on the unit price at which the imported goods. So unit price will be taken as a basis. What could be the deductions? Deductions provided is also to be considered for the value to be taken under the deducted value. Next, we have Rule 8 relating to the computed value. Now, the value which shall consist of the cost or the value of materials and a fabrication or other processing employed in producing the imported goods is first point. Second point is the amount for the profit, the general expenses equal to that usually reflected in the sales of goods, and the cost or the value of all other expenses. All this comes under the computed value. Next, residual method under Rule 9, they states that the value which is so determined shall not exceed the price at which such goods are ordinarily sold or offered for the sale of delivery. So this is what a residual method which we have to consider into the account. The selling price in India, you have to take a system which provides for the acceptance of customs purposes, the price of the goods on domestic market, the cost of production other than computed value, the price of the goods for the export to a country other than India, minimum customs value, arbitrary or fictitious values. These are the things which we have to consider relating to the residual value. So all this comes under the valuation. The next we have as one more is relating to the baggage. Baggage, I told you, it is a luggage, which is rules and regulations or conditions we have based on that, which is allowable. So we have a accompanied baggage and unaccompanied baggage. So this has been stated, the rules and conditions, and they have a red channel, green channel in the baggage. So people supposed to take the permissions from the authorities before taking that baggage to be transported from one place to another. So NRI, this is passengers related baggage, goods related baggage, all that rules and regulations are there. Taking that into the account according to the Customs Act, they have to be considered and followed. So all this relating to the Customs Authority, and whatever the chapters which we have left, we have been discussed till now. And yesterday, I think so, some of those, Surya, I think so, he is the person who is asking about the important questions to be stated. Now you have 12 chapters or 12 units you have under the block 5. Every block is important for you because in the essay time, they may ask you from each block, there are 2 units you have. From every unit, you can expect one question. So mostly from, if you take customs, so customs, under the customs, any question you can expect under the valuation. Baggage is also important. Valuation is also important. Duties. If you take the types of duties, explain different types of duties. That is one important question you can expect. Uh, Determine the methods which are applied under the valuation of customs act. That is also very, very important. The next, you can talk about the baggage. You can expect a question for a baggage. And next, we can talk about the introduction relating to the overview of Customs Act, Tariff Act, or the customs rules. So this you can expect a question from the Customs Act. The next, coming to appeals and revision. Yes, you can expect one question from appeals and revision. Then the time of next you have accounts. What are the accounts supposed to be maintained under the GST Act? That there also you can expect one question from the accounts. After the accounts, one administrative officers, you can expect one question from the administration officers' powers and duties. So what are the powers and duties of officers, or what powers they can exercise, what duties or the functions they have to do under the GST Act or under the GST Council? That is very, very important. That one question you can expect from administration and powers of authorities under GST Act. So one question you can expect from accounts, another question you can expect from administration. Next, we can expect one question from appeals. GST returns is very, very important. You can expect GST rules also you can expect. That means every unit is important for you because you have every block containing two units or more than 2 units. I think completely you have 12 units. So 5 questions you're supposed to attempt. So definitely from 10 units, you'll get 10 questions. And each question, that means in a choice also you can leave it. So there is a need that you have to have a focus on every unit, every block into the account. This is only from my side. I hope you have followed. Uh, any questions or any doubts? Any questions or any doubts?
No,
Yes, Surya?
no doubts, ma'am.
No doubt. So yesterday, whatever you have asked me, I think I have answered for it.
Okay.
Anything else to be discussed?
Ma'am, what about 20 marks questions?
20 marks question.
Yes, ma'am.
Question. See, usually taking all these 5 blocks into the account, wherever it is important, they may trust on it. So mostly they may, that is, it is left to the examiner. The examiner may give you any block into the account, isn't it? So any block he can choose and he can give you, no?
Okay, ma'am.
It is not so specified saying that this block only you'll get for 20 marks. It was not stated like that. So examiner's perception will be considered, and whatever, wherever he thinks that it should be noted, probably he may focus on
Okay, ma'am.
that. So mostly you can expect marks or duty or customs you can expect. But afterwards, don't feel bad if you are not getting any question relating to the areas which I have stated, because I'm not the examiner to set the paper, right? So I don't know who will set the paper and what the way they focus on it. I don't know. So I basically The experientially, I'm telling you that what can be the areas where they can touch. So you may get, you may not get, that is a different issue, but mostly assessment, do you have the topic here? Assessment, no. Returns you have, no? Returns. So e-filing returns, they may ask you a question, or accounts related, they may ask you a question, and they may ask you about the valuation relating to the customs. So these are the areas you can expect for 20 marks.
Okay.
Anything else? Hope, I think next teacher may be waiting for you. Thank you. I'm leaving now.
Okay. Thanks.